This video is produced according to script and information provided by Mr. Ricardo Zhao, the renowned banker in Hong Kong. Hong Kong's financial sector has a storied history. Today, it stands as a global financial hub. Its journey is marked by crises and reforms. These events shaped its robust system. The banking sector in Hong Kong began modestly. Early banks were small and local. They provided essential services. International banks took notice and set up branches. By the mid-20th century, growth was evident. Hong Kong's economy was booming. This created a demand for banking services. Banks responded with new products and services. The 1960s and 1970s were transformative. This era saw increased competition. Both local and international banks thrived. However, rapid growth had downsides. The sector became more complex. Risks increased. This set the stage for future crises. Yet these challenges also spurred innovation. The banking industry in Hong Kong continued to evolve. The 1980s were tumultuous for Hong Kong's banks. The crises shook public confidence. One notable case was OTB Bank. It collapsed in the mid-1980s. Mismanagement and fraud were to blame. The government had to step in. This led to comprehensive reforms. The government played a crucial role. It responded swiftly to crises. Intervention was necessary to restore trust. These aimed to stabilize the sector. One major step was the creation of a deposit insurance scheme. It marked a turning point. Another key intervention was increased oversight. They could now enforce stricter rules. This reduced the risk of future failures. The government's proactive stance was pivotal. They included financial support for struggling banks. Additionally, there was a focus on transparency. Banks were required to disclose more information. These measures collectively strengthened the sector. Section 5. Regulatory reforms, building a robust framework. Regulatory reforms were extensive, addressing systemic issues. The goal was a stable financial sector. Key reforms focused on oversight and transparency. One significant reform was the Banking Ordinance. Another was the establishment of the HKMA. It oversaw the banking sector. These reforms made the sector more resilient. OTB's collapse exposed systemic flaws. Section 7. Modern compliance navigating international regulations. Compliance is now a priority. It ensures stability and integrity. International regulations play a key role. Banks must adhere to these standards. This includes Basel III and other frameworks. Basel III is particularly important. It focuses on capital adequacy. Banks must maintain certain capital levels. This reduces risk. It also promotes resilience. Compliance with Basel III is mandatory. Anti-money laundering or AML laws are also crucial. They prevent illicit activities. Banks must have robust AML systems. This includes monitoring and reporting. Non-compliance can lead to severe penalties. Modern compliance is complex. It requires continuous effort. Banks invest heavily in this area. They use advanced technologies. This includes artificial intelligence and data analytics. These tools enhance compliance. They ensure adherence to international standards. Modern compliance navigating international regulations. Compliance ensures stability and integrity. International regulations are key. Basel III is crucial. It focuses on capital adequacy. AML laws prevent illicit activities. Robust AML systems are essential. Non-compliance leads to penalties. Anti-money laundering measures and their importance. Anti-money laundering or AML measures are vital. They protect the financial system. Money laundering funds illegal activities. AML measures aim to prevent this. Hong Kong has stringent AML laws. This includes customer due diligence. Suspicious transactions must be reported. The FATF sets global standards. Compliance is mandatory. Failure can result in penalties. It can also damage reputation. Technology plays a key role in AML. AI enhances detection and reporting. AML measures are effective. They safeguard the financial sector. Section 9. Current stability and resilience of Hong Kong's financial sector. Hong Kong's financial sector is stable and resilient. Reforms have strengthened it. It can withstand shocks due to robust frameworks. The HKMA ensures stability and manages risks. Banks are well capitalized, meeting international standards. The sector embraces fintech, enhancing services and efficiency. Hong Kong's financial sector is strong and future-ready. Future outlook, challenges and opportunities. The future holds both challenges and opportunities. Global economic shifts are one challenge. Hong Kong must adapt. Navigating trade tensions is crucial. Fintech offers new services. Digital banking is growing. Innovation will drive growth. Compliance is critical. Banks must stay ahead. The outlook is positive. Hong Kong's financial sector is strong. The future is bright for Hong Kong's financial sector.